Good evening, ladies and gentlemen. This is Carl, your ticker guy, and it is the 7th of October. Unfortunately, I come to you today to point out the market has lost 15% of its value in the 3 days since the passage of the bill. To put this in perspective, it took a year for the previous 15% to be lost from 1576. This move took only 3 days. Most importantly, I saw today the development of a very disturbing trend. The bond market was selling off at the same time the stock market was. That's not supposed to happen. What this means is people are fleeing not just stocks, but the U.S. It is that sort of flight from the United States, ladies and gentlemen, that can trigger a debt market or a credit market collapse and dislocation. The kind of thing that happened in 1932 and 1933. Contrary to popular belief, the 1929 stock market crash was not what caused the depression. It was a very serious stock market crash that wiped out a lot of people. But the depression was caused by a credit market implosion. It was caused by a dislocation in bonds. And that is what I saw signs of today. This, unfortunately, will produce at the same time a stock market crash, if it continues. Calling crashes is, well, let's just say that people have predicted 6 of the last 2. So I'm not going to make a crash call. But I am going to say that what is going on right now is extraordinarily serious, and the preconditions for a severe dislocation in both the stock and bond markets now exist. This is something, ladies and gentlemen, that you must be prepared for. And we're going to talk a little bit about preparations here and now. First thing is you must raise cash. If it is possible, you should have enough cash to survive. Not credit, cash, for 6 months. That assumes that you will lose your job and have a great deal of difficulty finding a new one. Credit, if this occurs, is likely to become essentially completely unavailable to consumers. What this means is you're going to have to live off of what you actually have, not what you can charge. For those of you that keep your jobs in this situation, you'll still have an income. For those of you that don't, make friends. Make sure that your family, yourself, people that you love and care about, and who love and care about you, are aware of the fact that things may get a little bit more difficult here than they have in the United States in the last 50 or 60 years. Now, no, folks, this is not the end of the world. And if we get this dislocation and we get a second depression, it does not mean that the United States is going to cease to exist. We're not going to have some asteroid land on all of us. But it does mean that the way that you're used to surviving and living, that is, going to the gas station and sliding your credit card in the machine, going out to eat, plopping the plastic down, buying your kid an iPod, charge it, pay for it sometime later, that's all going to come to an end. If you're heavily in debt at this point, you're in a lot of trouble. There's probably not much that can be done. You're very likely to end up bankrupt and have to deal with the consequences of that. If you're in a position where you don't have debt, you'll be okay, provided that you have the ability to survive and sustain yourself through what could be a prolonged period of job loss. Put this in perspective, folks. During the Great Depression, 25% of America was unemployed. Right now, if you look at the real unemployment stats, including the disgruntled people that have given up, those used to be counted as unemployed. Today we don't count them, you see. Unemployment statistics are somewhere between 9 and 11%. So yes, it's bad, but it's not the end of the world. Can we stop it? Yes, we still can. Go over to supportedthebailout.org, click on latest news, and at the bottom you'll find a link to a PDF. It's a one-pager. It has a picture of the market, as you saw on the screen at the beginning of this video. A little bit of text. Print it out, fax it to Congress, both senators and your representative, and pick up the phone. Call them. Demand that they lock up the children and let the adults in the room. It has to happen now, folks, not after the elections. We do not have 4 months in order to let this play out. It won't go that far. The market is systematically picking apart companies, piece by piece, that it thinks might have lies on their balance sheet and might be misrepresenting their exposure. The CEOs of Lehman and AIG today tried to blame mark-to-market accounting, everything but taking responsibility themselves. All they've done is add more instability into the market by making people believe that every other firm out there is lying as well. Price action today in stocks like Bank of America, Morgan Stanley, Goldman Sachs, all very troubling. This won't go on for much longer, ladies and gentlemen, before the credit markets really seize up in ways that you can't imagine. Congress needs to take the mouth breathers, the Henry Paulsons and the Ben Bernackes, who believe they're the smartest men in the universe. Mark-to-market, according to them, remember, is wrong. Everything's too cheap. If it was too cheap, why did the $3.5 trillion worth of money sitting in hedge funds, why is all that money sitting there instead of buying up these too cheap assets? When you buy a stock, why do you buy a stock? Because you believe the market price, the mark-to-market, is too low. But none of this money is coming in to buy up these mortgage-backed securities. It's time for Congress to expose this duplicity, lock those guys in the corner. Let them sit and squeal or squirm, whichever they prefer, and get other ideas in there. We need to restore trust. We need to take these balance sheets and force them to be fully transparent. We need to force leverage down to 12 to 1, and we need to cage the derivative monster, and we need to do it now. Not in 6 months, not in 12 months, not after some comment period. Today. This is an emergency. Then, having done that, we will figure out who is insolvent and who is not. And for those firms that are insolvent, they need to be forcibly recapitalized. For those for which a debt-to-equity cram down will suffice, we can do that. We can void the stock, convert the bonds to equity, spit the firm back out, newly reorganized, no debt on the balance sheet, great economic position to be in, especially into a recession, and let them go on their way. You say, well, that's not really very fair. Well, sure it is. The stockholders in a bankruptcy are going to get zero anyway. The debt holders would get their whatever their recovery value is, but they're getting that in new equity. They can choose to sell if they wish, or they can hold on and maybe get some appreciation. That's a choice. This avoids the years-long process that goes on if the firm just goes ahead and files a Chapter 11. The other alternative, if it becomes appropriate, is for Treasury to step in and potentially buy super senior tranches in some of these firms. By the way, there will be thousands, folks, that under a true mark-to-market model will be proven immediately insolvent. But for those few that are truly too big to allow to go through that process, or which have negative equity even when the bonds are put in, we can go ahead and we can forcibly recapitalize them with the government providing some backing. That's okay. And not the way it's been done. Realize that by buying in preferred stock at the top super senior levels, you're actually generating 10 times as much lendable cash. But with it will have to come provisions to guarantee that it goes back into the economy as not hoarded. Once we forcibly reorganize these institutions, we will know that everybody has a transparent balance sheet, and everyone with whom they trade does as well. We'll know that all the firms that remain standing are solvent. This has to be done now. Ladies and gentlemen, I do not want to see an economic depression in my lifetime. No, it won't be the end of the world. Yes, I'll survive. I'll be fine. You will too, although you might find that you get a little hungry, you don't have a job, and life's tough. Some of the things that you've enjoyed over the years may go away, but we as Americans will get through this. But what we cannot do is allow Congress to sit there and fiddle while room burns. It's time for all of us as Americans to get off the dime and get this done. Please, pass this video around and go to supportedthebailout.org. Download the PDF and get on the phone now. It's that important. Have a good evening.